Jai Hind friends. If you are new to this channel, then please hit the subscribe button so that whenever a new video is uploaded, you can get the notification. And if you like the video, then please hit the like button. This will keep motivating me to make these videos. First company is Havells, and today it was down by around 1.39%. And if I look at its 1 year return has been 3%, so almost flat we can say. If I look at 5-year return has been 118%, which is still decent. And if I look at maximum chart pattern has been fantastic. You can see it has been going from the bottom left to top right. If I talk about the business of the company, I'm sure most of you must be aware what Havells is into. But for those who are new to stock market, Havells is a FMEG company, which is fast moving electrical goods company. And its main business is manufacturing and distribution of electrical goods like motors, fan, modular switches, home appliances, cables and wires, domestic circuit protection devices, electrical water heater, air conditions, and many more. So basically anything related to electrical equipment, this company deals with those products. And here you can see its brands, which is Havells, Crabtree, Lloyd, Standard, and Rio. So these are its 5 brands, and these brands are into different product segments. And now I'm at the quarterly results, and if I look at the year-on-year sales growth, then in the last quarter sales growth was around 12%. And if we compare this sales growth with previous quarters, there is definitely a dip. If we compare it with March quarter and June quarter, there is a dip in the year-on-year sales growth. And if you look at the operating profit margin, you can see operating profit margin has also reduced. Earlier it was 12%, then it reduced to 9, then to 8. And from the last quarter it has started recovering. So the OPM percentage went down because of the inflation, high cost of raw materials, and in the last quarter we saw some improvement because inflation went down a little bit. And now in the next quarters or next coming quarters, I'm expecting that this company will be back to its previous OPM percentage, and we can expect good result from this company. And not only from this company, I think with all the companies which are facing issues with their OPM percentage because of the inflation issue, I think their OPM percentage in this quarter and in the coming quarter is going to increase. So let's see, the result season is going to start from April, and from this point the next direction might come in the share market based on the results of the companies. And now I'm at the chart for Havells, and this company made a high at around 1400, and you can see it is currently around its support line, which is this. So around 1150-60 rupees is the support for this company, and the company is trading at that level currently. And in case if this company goes further down from here, then we can expect this company to go down till 1100 also, which is not very far from the current level. So in case if somebody liked the company, then you can keep this company also on your radar. This company is currently down by around 17% from its 52-week high. And right now, whatever company we will discuss throughout this week or throughout the next week, I think the best time to buy this company will be only after looking at their quarterly results. So you can keep all these companies which we are discussing on your radar or your watch list, because these are down to their supports. In case the quarterly results are better, there is an improvement in the operating profit margin and in the profit growth, then we may see an upside in these fundamentally good companies. And if I look at the RSI indicator shows that this is currently at 41. So it is about to touch the buying zone, and it is very close to the buying zone right now. Next company is Avenue Supermart or Dmart, currently trading at 3300, and today this company was also down by around 1%. And if I look at 1 year return has been in negative, minus 17%. If I look at 5-year return, these are still very good, 133% return. And again, I'll repeat the same thing. This is the benefit of investing for long term, that even after this company is down by around 17% in the last 1 year, and from the period of last 1.5 to 2 years, the company has not shown much progress in terms of share price. But still, if we look at the returns for 5 years, 5-year return are still looking very good. And that is why I keep saying that at least we should give 5 years to the company in order for that company to provide us good returns. And if I look at maximum chart pattern, maximum return has been 436%, and the chart pattern for this company is also going from the bottom left to top right. Although there is a dip right now, which I believe is nothing but an opportunity to accumulate this company. And now I'm at the quarterly results for this company, and in the last quarter the sales increased by 25% on year-on-year basis, which is still a very good increase or very good growth. But if we compare it with previous quarters, then you can see there is a dip if we compare it with June or September quarter. But in my opinion, 25% growth is still a very decent growth. And if you look at the yearly numbers, in the yearly numbers also you'll see a very good improvement. From 2021 it was 24,000 sales, which increased to 30,000, and in the 12 trailing month it is currently 41,000, and the profit has also increased. In the 12 trailing month it is around 3,600. So there is nothing fundamentally wrong with the business. What we are seeing right now is just a temporary dip, which in my opinion is an opportunity to accumulate this company. But again, as I said, if you want to invest in this company or the companies that we are discussing, you can wait for their quarterly earnings. And now we are at the chart for Dmart, and you can see that this company is now very close to its previous support, which was around 3250. It is currently trading at around 3300, so it is very close to 3250, which was its previous support. From its 52-week high, it is currently down by around 28%. So the downside from here, I think, is very limited. And if the company is able to show good results in the coming quarter, then we may also see a reversal from this level. In case if the results are not that impressive, then also I believe for the longer period of time, for the longer horizon like 5 to 10 years, this company is very good. This company can give very good returns. And if I look at the RSI indicator also, it is currently below 40. It is currently at 35, which is stating that it is currently in the buying zone. Our next share is Jubilant Foodworks, or you can say Domino's, currently trading at 440. And if I look at 1 year return has been in negative 16%. If I look at 5-year return has been 81%. If I look at the maximum chart pattern you can see has been very good, going from the bottom left to top right, although there is currently a dip right now, which I believe is nothing but an opportunity in this company also, because this company also is fundamentally very good and it is currently increasing its number of stores. So in the future this company can also do very well. And previously also this company has shown big downsides. You can see at these levels there was a dip, and currently again at this level you are getting a dip. But this again is temporary. If you increase your horizon to 5 to 10 years, you will realize that this was nothing but the buying opportunity. And people who are already invested in companies like Havells, Dmart or Jubilant or the other companies that we will discuss, if these companies are currently down in your portfolio by around 15%, 20% or even 40%, do not worry too much about it. Do not try to book your losses and invest in some other company, because that will be the biggest mistake. Because what will happen is that you will book loss in this company, and whatever company you will buy, that may also start going down, because the market condition is such that companies are currently going down and touching their lowest supports. And when the market condition will reverse, then these companies which are currently down by around 40% or 30%, these will easily double your money in the period of less than 1 year. And this is the benefit of investing in fundamentally good companies, because the basic definition of fundamentally good company is that they will certainly go down. When the market will go down, they will go down along with all other companies, irrespective of whether it is fundamentally good or not. But when the market will recover, then these are the companies which will recover the fastest. However, in bad companies, what you will see is that when they go down, then it is very hard for them to recover. So till the time you are invested with fundamentally good companies, do not worry too much. Right now the situation is such that everyone's portfolio is down. And now I'm at the quarterly results for the company, and you can see in the last quarter sales increased by 10%. And the operating profit margin was around 22%, which if we scroll to the previous quarters, it was highest around 26%. So companies still need to recover 4% in their operating profit margin, which I think they can in the next coming quarters. So let's wait for this company's results also. And now we are at the chart for Jubilant Food, and this company from its 52-week high is down by around 32%. 425 is its current support right now, and it has moved up from that support to around 440. So you can keep this company also on the radar in case the quarterly results are good. Then in this company also we can expect a good upside. Our next company is ICICI Bank, and this company also made a high at around 960, and it is currently trading at 845, which you can see was its support earlier also, and currently it is at the same level. If it goes further down from here, then you can look at this company at 800, and the possibility might come in the banking sector because Fed has increased the rates. So there are chances that we may see few more banks falling in US. So let's wait for this week and the next week. And the reason why I'm discussing ICICI Bank and the next will be Kotak Bank is because there was a comment from one of the viewer where he wanted my view on ICICI Bank and Kotak Bank. So both bank, ICICI Bank, Kotak Bank, these are very strong bank. And I mentioned it earlier also that if you believe in India's growth story, then you also have to believe in the banking sector, because without the growth of the banking sector, the Indian economy will not be able to grow. If you look at Nifty also, you will see that the majority of the allocation that Nifty has in terms of sector, banking sector and finance sector has the maximum allocation in Nifty. So banking sector is the backbone of almost all the economies, and if an economy needs to grow, then the banking sector will also grow. So SDFC Bank, ICICI Bank, Kotak Bank, whenever you find these banks at their support level at good discount, you can go with these banks for long-term investing for a period of 5 to 10 years. Now we are at the chart for Kotak Bank, and Kotak Bank made a low at around 1650. And I remember we discussed this bank when it was around 1650. So from there it has shown some recovery, and it is currently trading at 1700. So as I mentioned earlier, this also is a good bank. It is currently growing its profit at around 20%. And in the last few years, there hasn't been much improvement in the share price growth, but eventually that gap will reduce. And when it will start reducing, then you will see a good upside or good growth in the share price also. So if you are invested in Kotak Bank already, stay invested is what my opinion would be. Stay invested for long term, because you will never know when the price will start moving up. And there was also one question about Mr. Uday Kotak leaving Kotak Bank, and should the shareholders of Kotak Bank worry about that? So I think there is nothing to worry, because these banks, ICICI Bank, SDFC, Kotak Bank, these are very good banks, professionally run banks, and the performance of the bank or a company does not depend on one person. There is always a replacement for everyone in the world, and good companies always focus on the succession plan. Succession plan means that if somebody is at a level right now, for example a CEO level, what they will do is they will start preparing or grooming another person who can take up his role if that person decided to leave that organization or if that person retires. So I don't think you should be worrying about that point too much. Please remember, these were all my views. Please do your own research and study also before taking any buying and selling decision. And in case if you have any question, or in case you want me to make a video on any specific topic, you can mention it in the comment section also. So bye for now, we'll meet in the next video. Thank you.